Hello everyone and welcome into the channel. My name is Brent with Investing on the Go. Today we're going to be continuing answering questions from our past videos where today's topic is why do I prefer owning covered call ETFs versus selling calls and puts on the indexes such as SPY, which tracks the S&P 500, and QQQ, which tracks the NASDAQ 100. We're going to go ahead and do a response. So we have a question from Anthony here. You should consider stock option selling instead of dividend funds, way better returns. And then another question we're going to be answering is, do you keep any money in savings or retirement? And along with that same kind of topic is from Juan, do you have a 401k that you're pulling from in order to cover your monthly expenses, or is that separate? So that is what we're going to be covering in today's video. And of course, this all ties to the whole topic of our financial flow of living out of our brokerage. So the individual was asking us, we could be selling calls and puts and investing into the underlying assets and have a much higher rate of return, in order to fund our living out of our brokerage account. And we'll go in and chat about that. So if this is your first time here to the channel, I would really appreciate if you go down below, subscribe, smash that thumbs up, helps the YouTube algorithm let people know that they enjoy the content, and hopefully can help somebody else out there who may have the same questions as well towards me, or maybe answer some of their questions they may have for themselves. So with that said, let's go ahead and get into the video. So diving into the questions, you should consider selling stock options instead of dividend funds, way better returns. And right off the bat, yes, you will absolutely get way better returns by investing into the underlying assets, into SPY or QQQ, and then selling options at a 20 delta, 10 delta, right? You're basically selling out of the money calls that are going to expire out of the money, and you'll be able to collect that premium, and that is going to get a much better rate of return. And I've done this in the past. Several years ago when I was making content about selling covered calls over using Merrill Edge, I was making anywhere from $1,000, $2,000. I made videos where I made $5,000, $8,000 in the month of April 2022, but there was a lot of market volatility, and during this time frame I was selling covered calls on a weekly basis, on a monthly basis. I was always watching into the market and trying to plan, where exactly are we at, how much upside potential do we have. Here we are, 2025, we're near all-time highs. There has been a bit of a pullback, but during these pullbacks it makes it really hard to, where should I set my strike price that I'm high, where I can collect the amount of premium needed to cover my monthly expenses without stressing me out, without having to monitor and watch what's taking place in the media, in the market, and just ultimately making sure that I'm going to generate enough premium to not only have to sell my shares, right? If you begin to, say you only make $1,000 of premium in the month of December, that means I have to sell out $2,000 or $3,000 worth of shares in order to cover the expenses, and that could create some fluctuation where maybe in the next month I can no longer write 5 covered call options. I have to reduce it to 4 covered call options, and then I get into the cycle of having to risk enough in order to generate the enough income, dividend income, and then sell shares. So that kind of creates the whole issue of stress. And I want to be more hands-off, kind of going back to my own real estate business. I pay a 10% flat management fee. So if I'm bringing in $5,000 of rent in 1 month, I pay the property manager 10% of that rent. So they generate, they get $5,000 of rent. They make $500. Multiply that by 12 months. That's $6,000 that's coming in directly for managing my property, versus when I'm invested into these covered call funds, they're writing covered calls on 50% of their shares that they own. They're writing puts. They're writing the spreads. They're monitoring and doing this at a professional level where they're the ones dealing with it, not so much myself. The returns of SPY-I and QQQI versus the indexes themselves that they follow in total return is very similar here. I went ahead and added a little image here. So here we have QQQ at a rate of return for the year to date at 19.87. The QQQI is trailing right behind, about 2% at 17.54. SPY is 17.17. SPY-I is 15.83. Now you remove that yield out of there, right? There on the ex-dividend, it's being removed from the price. And We have the QQQI still putting on roughly a 1 to 4% gain per year, and the SPY still putting on a 1 to 3% average per year. So if I'm putting $100,000 into this fund, on average, their price is growing 1 to 4%. So I put $100,000 in, it grows to 101, 104. That SPY has paid me out $12,000 in dividends, return of capital, and it is much more easier to estimate how many shares I need to buy to cover my average normal expenses. And that's much easier dilemma with stress and all that than trying to figure out how many covered calls and at what strike price I need to be selling in order to generate the income needed on a monthly basis to cover the expenses. So that's why I go with covered call ETFs versus selling calls and puts on the indexes. While the returns are greater, you're dealing with the stress, and there's a lot of volatility, not only with the market, such as here recently in the past week or so, the market has fallen 2.5%. If you're writing calls, 2% out of the money, 3% out of the money, that's not generating as much premium. And then that market can quickly snap up and call away your calls, right? You can get your you can go into the money and you get your shares called away. So I just don't want to deal with all of that. I just want to be very hands-off, focused on generating the income from my funds, working on my YouTube business here on this channel, working on my other YouTube business, continuing to create different ideas of expanding those platforms, and also continue to work more with my real estate business and others here in my city locally, generate other side income, which I could funnel into these funds to grow them more to generate on a monthly basis. So that's kind of my behind the scenes kind of thing that I'm working on, and why I prefer covered call ETFs versus those indexes. Okay, moving on to the next topics here. We had a questions from Mystery Enigma. Do you keep any money in savings or retirement? And along with that, Juan had asked, do I have a 401k that I'm pulling from in order to fund my expenses in this individual account, or is that separate? So savings wise, I always like to keep 3 to 6 months of savings in a high yield savings account. So that is completely separate from my Fidelity account. My Fidelity brokerage account, it houses inside of the individual account everything needed to have like its own ecosystem where it's self-fulfilling. You know, the dividends are rolling in, it's paying out all the expenses, and then any excess capital is being reinvested back into the funds. So the savings, on the other hand, that is being funneled by my real estate business. I have direct deposit set up. So anytime I get paid from my property manager, it goes into SoFi. I get SoFi Plus over there. So I have a high yield savings account. It goes into my savings account. It hits the savings account. I go ahead and distribute, you know, what capital goes into my real estate. You can set up vaults. I move the capital over into my real estate vault. If I get paid from YouTube, I move it into my YouTube vault. And I keep those savings at a reasonable level, along with my own level of savings that I like to kind of keep for cash on hand, because you just never know with any sort of businesses. They could be vacancies. You're going to have to cover the mortgage. There could be repairs that'll pop up. Anything can pop up. So I always like to have a little bit of a safety cushion. And because it has to stay in cash, I like to keep that in a high yield savings account. In terms of retirement, these are separate. I'm not pulling from my retirement accounts in order to fund my individual account. These are completely separate. I have a IRA, a Roth 401k that are completely separate from the account here that I'm using to fund our expenses. So I still have a 6-figure retirement account that's heavily invested within the S&P 500 or something very similar, targeted towards growth. I'm still owning a large amount of Meta. I bought into Meta right around $608 with a ginormous chunk of capital, and it is still growing on the side. So I'm still heavily invested in growth while I'm invested into these covered call funds, and all of that stock market side only makes up probably 50% of my overall net worth, and the rest is more solid assets where it's not as liquid, such as real estate, where I have multiple rental properties that are generating income, and I'm not using that income unless I absolutely see a reason to send some money into my account in order to help pay down some I'm not paying myself. A lot of business owners like to pay themselves on a monthly basis. I like to just kind of have that build up. If I see opportunity where, hey, the market's pulling back to 3%, I'll be like, hey, I'll send $1,000 over that way, and you can, buy in, average in, dollar cost average in at a faster pace than just reinvesting the leftovers on a monthly basis, right? I'll be doing a little bit more of that as the market kind of cools down here, going over that way. So I think that answered the questions. I do like to separate my savings. I do like to have separate retirement accounts, and that is all separate and not funding our living expenses in any way. The whole ecosystem of our individual brokerage account is all separated. So it all has its own ecosystem where it's invested into dividend companies and covered call ETFs, which are generating dividends. I have miscellaneous income coming in as well that I like to fund it with. As this channel here on YouTube gets monetized, we're going to see that within our budget. So right now I'm entering my transactions. I've entered my transactions so far here in December 2025. I have my plan. I'm still going through and planning out my investment income, my freelance income, miscellaneous income. And then as I get expenses that are coming through here, such as my utilities, my gas, my water, I'm going to begin to add these in, and we'll cover more of the budget stuff on a month-to-month basis going into the future here in 2026. It'll be exciting to kind of see how this all plays out, as this is all for the year. So I think that is going to be it for today's video. If anybody else out there has any questions, whether it's pertaining to this video or one of my past videos where we went over the living out of a brokerage account, you guys can drop a question down below or join the Discord server. It is completely free. You guys can post your question in there or send me a DM if you have anything specific you'd like to have asked. And again, I'm not making these videos for financial advice, and I'm not a tax professional by any means. This is just my journey, what I am using and why I'm using these specific ETFs and funds that I'm using to fund my current lifestyle. If you guys would like to join along on the journey, you guys can subscribe to the channel. Be sure to also go down below, smash that thumbs up if you guys appreciated the information, and I will catch you guys in the next one. Bye-bye.